It's 11 o'clock p.m. here, Sunday evening in downtown Toronto. It's March the 13th, 2022. Today I'm going to be sharing with you what I do every single week to take a look at the real estate market and kind of assess what's going on, specifically in the downtown core and specifically for condos. That is the bread and butter of my business. We do have a lot of investors that find this information quite important. So I track it every single week. Been doing this consistently for the past few years. This is my job. I live, breathe, and eat real estate. So just wanted to give you an insight into my world and show you what I do to take a look and analyze the market. So let's get started. So first things first, let's look at the sales numbers. I obviously inputted all this data into spreadsheets and populate these graphs. Again, you can see that I've been tracking this data since consistently since 2016. I have more sporadic data that I've been tracking, but it doesn't make as nice of a graph. So if you have a weekly data point, then it does look a lot nicer. So currently we're at 739 active listings. You can see that the active listings is starting to come up, which is typical about this time of year. Historically speaking, you can see that in the beginning of the year we are very low in inventory, and then it starts to spike as we get closer to the spring. Except when we were during COVID. So what happened during COVID? COVID hit around this time here. Inventory just spiked. If this did continue, we would have seen the prices come down dramatically in the downtown. We did see them start to drop, and then all of a sudden the inventory just disappeared, and we saw the market come right back up. So you can see this reflected on my other charts below, but just keep in mind everything is related to each other. It's the supply and demand is still alive and kicking. So when you get low supply, high demand, prices go up, and that's what we're seeing right now. If you look at the number of unit sales, this kind of gives an indication of how much volume is moving. So we had actually 788 sales in the downtown core. Again, specifically C1, C8 district is what I'm talking about here. And if you compare it to the previous year, which was an unprecedented year, we had 921 sales. Don't know if we're ever going to see that again in February. Before that, right before COVID hit, we were at 542 sales, and in 2019 we were at 409 sales. So as you can see, 788 sales, very strong sales month for the month of February so far. If you look at the average prices, we're pretty much at an all-time high. I don't like to use average price as a price indicator just because there are too many outliers when you're looking at the average price. So the best metric to actually use in regards to pricing is the HPI. So the home price index. It basically tracks one type of property throughout the life of the graph. So it gives you a much more accurate representation of what's going on with price, because they're basically just tracking one type of property. So we're going to filter down the condos. We call them apartments here. And then we'll look at the C1 and the C8 district, because those are the downtown core districts. So apply that. So you can see the prices are at an all-time high. Surprise, surprise. This dip happened during COVID. Again, you see the bottom of it is December 2020. And if you remember, go back to my chart here, we saw the peak of the market in November. So the peak of the actual inventory in November. So again, surprise, surprise, lots of inventory. The prices do start to come down, and then once the supply dried up, we saw this graph go right back up again. So here we're currently at 820,500 for the benchmark price in the C1 district, and 769,200 for the C8 district. So market's hot. So I was talking about the average prices and how you should caution yourself using this as a price indicator, just because again there are so many outliers, but it does give you some indication. Another metric people like to use is the median price, so I track that as well. So our median price is at currently $770,000. And then another metric I like to look at is the sales price list price ratio. This gives me an indication of how hot the market is and how frenzy it is. So right now we're at 111%, 110% was in February over the asking price. So this is this tells me most properties are selling for over asking, and you're gonna have to pay at least 10% more than the current asking price to get an accurate assessment of the market. Because you'll see right now that a lot of prices, oh, this looks so cheap, but then they're not really waiting for that price. They're expecting a price much higher. And on average right now, if you can see from the market statistics, it's about 10%. Okay? But this gives you an indication of how frenzied the market is. So you can see that, even before COVID, things got really busy, and things started picking up, and we were only at 104%, 105%. Right now we're at 110, 11%, which is insane. Another indicator that is also good to look at is days on market. So how fast do things sell? So right now, no surprise, we're at an all-time low. We are at 10 days on market. This is actually not an accurate measure, because if anything, people, what agents usually do is they hold back on offers, and they usually hold back offers for a week to 10 days, depending on when they put the property on the market. So artificially, this creates, at least 7 to 10 days on market. If in reality, if these properties came on market, they would be selling, within a day or not even a day. So this number is actually a little bit higher than reality, because agents do put in the holdback offer clause into their listing, so they're artificially holding back offers from coming through right away. But in reality, this would be a lot lower. So again, 10 days is like as low as it gets. We're seeing a crazy market. Things are just flying off the shelf right now. So now let's take a look at the rental side of things. So as investors, we obviously track the rental market as well. We want to see what's going on with our rent revenues, and when we decide on what prices to rent the properties for, and how to strategize on pricing and things like that. All of these numbers and these values, they come into play. So let's take a look at the active listings right now. So we're just slightly over 2,000 active listings in the downtown core. As you can see, this was what happened during COVID. Everybody moved out of the downtown core. No students, no short-term rentals, all that stuff just disappeared. So you just saw the inventory spike. So we hit it all-time high of 6,900 units, which is unprecedented. Don't know if we'll ever see that again, but that happened, just a few years ago. So, we're back down to normal levels again. So which is good, and we're seeing that reflected on the market. So if you actually look at the actual number of leases that happened, we had 1362 leases in February, which was quite good. If you compare it to February of 2021, which was again during COVID, we saw 2,100 leases. Again, this over here, I don't know if this is ever going to happen again. The prices dropped, and we just saw a huge influx of demand coming back into the downtown core. So this is what you're seeing over here. But if you compare it to pre-COVID in February of 2020, we saw only 1,075 leases, and in 2019 we saw only 910. Typically, people don't like to move in January, February, December, the slow months of the year. But again, 1,362 is still pretty good. Now let's take a look at the average rents. So average rents is actually not a bad, is not a bad indication of price for the rental market, just because I find that there are less outliers and there's a pretty good sample size to take from. And plus, people's rents are not fixed. Typically leases are for a year. So, if there is cheaper rent available, and you're paying more, there is, people can move to cheaper rent. And if the rental prices are too high, then you're going to pretty much stay where you are. So in terms of price equilibrium, I find that the average price, works for rental prices. So I'm going to use this metric to look at the market, and I find that is a pretty accurate measure. So if you can see here, we've been pretty much flat since July. The market prices haven't changed much, and this has been indicated in what's going on with the rental market. On average, we do pretty much a rental every single day. So we see this day by day. On the median prices, you can see here as well, the market's been pretty much flat. If you look at the rent price list price ratio, again, we're just under 100%, so 99.72%. So the rental prices are not really rising that quickly. We did see the spike back in July, but then things kind of stabilized and have flatlined. So we're kind of seeing nothing really exciting happening with the rental market, so you need to price accordingly if you want to get your property rented. The number of days on market, we're currently sitting at about 20 days. So on average, it takes about 20 days to rent your property. As you can see here, it's been relatively stable for the last couple of months. It did, drop back in August, and again, we can see what happened in August. So again, this is what happened in July. This is what happened in August. Huge influx of demand to absorb whatever supply was on the market, and it caused the prices to go up, as it happens when things are going over asking, and the days of markets to go down. So all these graphs are related. As you can see, once we have the data, we can go back and see kind of what's happening. So this has been very helpful for me to use as a tool to kind of assess what's going on with the market. So I hope this kind of helped you as well. Finally, if you want, I can go through, the average prices of studios. You're looking at about just over 500. One bedrooms are, sitting at just about 700,000 now. One bedroom dens are just going close to 800,000. Two bedrooms, they're close to $1 million in downtown now. Two bedroom dens are going for about 1.5. And three beds are going for 1.3 and above. So again, it's much smaller sample size. You can see that here. Three bedroom dens, again, not that much sample size, so take that with a grain of salt. And we really don't have much data for 4 bedrooms or 5 bedrooms. They don't really exist in downtown. If you look at the rental markets, so let's look at the studios are going for about $1,750 right now. One bedrooms are going for about $2,061, just $2,050, just above $2,000. One bedroom dens are going about $2,300. Two bedrooms are getting about $2,900. Two bedroom dens are getting just over $3,000, and three beds, again, not much sample size, but they're getting over $3,500, close to $4,000 in some cases. And if you have a 3 bedroom plus 10, again, there's 2 samples that were leased in the past 2 months. Not too much of a sample, so take that with a grain of salt. And again, the 4 and 5 bedrooms, they're pretty much non-existent in downtown Toronto. So that's about it in terms of the data. Hopefully that gives you some insight into what's going on with the current market. I hope that helps. Leave your comments below if you feel like you have any questions for me. I'm going to try to do this more regularly, so hope you enjoyed that, and thanks for watching. I'll see you on the next video.